Hello everyone, my name is Cydney Nash and I'm a certified financial planner, certified investment management analyst, and a wealth manager here at Raymond Gorel Wealth Management. Today, we'll be covering one of the most lucrative tax strategies within the Microsoft benefits infrastructure, the Mega Backdoor Roth. If you or someone you know could benefit from this strategy or any of the other services our firm offers, feel free to contact our team for a complimentary consultation where we will review your financial situation to identify opportunities for optimization in investments, tax planning, estate planning, employer benefits, and retirement strategies. Without further ado, let's jump into today's topic, the Mega Backdoor Roth. So what is the Mega Backdoor Roth? At its core, the Mega Roth is a tax strategy embedded within the Microsoft 401k plan. By undertaking a series of transactions, employees can make Roth contributions beyond the normal IRS limits. In 2026, employees can contribute $24,500 either as a pre-tax or Roth contributions, with an additional $8,000 catch-up contribution if you will be age 50 or older by the end of the year. The Mega Backdoor Roth allows certain employees to contribute tens of thousands of additional dollars beyond these limits annually. To fully understand the benefits of this strategy, let's review how pre-tax versus Roth contributions work for tax purposes. To reiterate, for 2026, employees can contribute $24,500 to the pre-tax or the Roth account, or a combination of both. Pre-tax contributions are made before taxes are paid, which reduces taxable income. However, all contributions and growth are taxed upon withdrawal in retirement. Roth contributions, on the other hand, are made after federal income taxes are paid, meaning both the original and future contributions are tax-free upon distribution. The decision to contribute to a pre-tax versus Roth accounts depends directly on an employee's current tax rate versus the anticipated future tax rate. Concurrently, with employee pre-tax or Roth contributions, Microsoft matches 50% of your contributions made to the plan up to $12,250 for 2026. This matching contribution is made on a pre-tax basis. Based on the contribution limits discussed earlier, the total amount going into the 401k for an individual maximizing pre-tax contributions is $36,750, including both the employee and the employer contributions. This $36,750 total is still below the IRS maximum contribution limit for all sources of contributions, which is $72,000 for those under age 50 and $80,000 for those 50 and older. So where can this $35,250 difference between the IRS limit and the maximum contributions go? You guessed it, the after-tax account. Let's discuss the tax features of the after-tax account, as it is a blend of the characteristics of both the pre-tax and Roth accounts. After-tax contributions, as the name implies, are made after federal taxes have been paid. However, any growth that occurs while funds are in the after-tax account is taxed at ordinary income upon distribution. So you might ask, why contribute to an account that does not provide an immediate tax deduction while the growth is eventually taxed as ordinary income? because we don't leave the funds in the after-tax account to grow indefinitely. The Microsoft 401k plan allows participants to convert these after-tax funds to Roth. And the best part, if funds are converted to Roth before any growth occurs, the conversion is entirely tax-free. Here's how it works. Once the pre-tax or Roth contribution limits are reached, the employee can defer additional funds into the third account within the plan, the after-tax account. These additional funds are then converted into the Roth account where they can grow tax-free until they are distributed in retirement. At this point, it should be clear that this strategy can be a major tax advantage for retirement savers. It is also important to note that most 401k plans outside of Microsoft do not offer this strategy. Among all 401k plans in the US, only 30% provide access to the Mega Backdoor Roth. To better illustrate the tax benefits of this strategy, we'll compare an individual who fully utilizes the Mega Backdoor Roth strategy over their career versus diverting the same after-tax funds into a taxable brokerage account. Using the same numbers from the previous example, let's say employee contributes $35,250 per year for 20 years to a brokerage account. Assuming an 8% growth rate, these contributions will grow to over $1.61 million over the 20-year period. This means that within the taxable brokerage account, there will have been $705,000 of contributions and roughly $905,000 worth of growth. Assuming a 15% long-term capital gains rate, this will result in over $135,000 of taxes paid when the assets are sold. If instead, this employee utilized the Mega Roth strategy over the same 20-year time frame, all of the dollars could be distributed in a tax-free manner, resulting in $100,000 in tax savings. Before wrapping up today's discussion, I want to highlight a few key considerations surrounding the Mega Backdoor Roth. If you have a pre-existing after-tax balance within the Microsoft 401k or growth on recent contributions, you need to be aware of the Pro Rata Rule. This rule states that if an after-tax account contains both contributions and taxable earnings, any conversion or distribution will be partially taxable based on the proportion of contributions and earnings in the account. Since these numbers vary for each individual, we highly recommend consulting with our tax professionals, such as our in-house CPA team, to understand the tax implications of any future conversions. In some cases, it may be beneficial to execute an in-service rollover of after-tax contributions and earnings to an outside IRA in order to optimize future in-plan conversions. Given the complexity of these transactions, having a tax specialist on your side is critical when making conversion or rollover decisions. Thank you for taking the time to learn about the Mega Backdoor Roth strategy. At Raymond Gorel Wealth Management, we have over $1 billion in assets under management. As a firm, we strive to serve as an effective one-stop shop for comprehensive retirement planning. Our team of CFP and CPA professionals specializes in helping clients take advantage of advanced planning strategies to materially enhance their ability to enjoy life both before and after retirement. We invite you to schedule a complimentary consultation with our team by giving us a call, sending us an email, or visiting our website today.